Welcome to the Daily Update Podcast, where I'll go over the action in the market for Thursday, July 31st, and we'll see how things look for Friday, August 1st. Going over what happened on Thursday, the S&P 500 started the day with promise, opening higher and briefly surpassing the 6,400 level, nearing its R2 resistance at 6,425. This early strength was fueled by solid corporate earnings, which lifted the futures about 1% in pre-market trading. However, the session turned choppy as selling pressure emerged, pushing the index to close near its intraday low, down 0.37% for the day. Despite this pullback, the S&P 500 remains above its 20-day moving average, signaling that Thursday's move is more of a pause than a major downturn, at least yet. Volume was above average, reflecting active participation, and the index continues to trade above its 20, 50, and 200-day moving averages, keeping its positive trend intact across all timeframes. For the month of July, the S&P 500 closed up a solid 2.17%. Sector performance was mixed. Communication services led the pack, while semis and healthcare underperformed, with the latter weighed down by possible policy pressures. Standout stocks include Meta, which surged over 11%, while Nvidia, Tesla, and Netflix saw declines. Looking at key levels and technical analysis, the S&P 500 did hit its R2 level early at 6,425, but couldn't hold above 6,400, falling below the R1 resistance level at 6,394. It found temporary support at 6,370, but faced renewed resistance at 6,400. By the close, the index had slipped below the daily pivot at 63.65 and S1 at 63.34, finishing just above S1. Intraday trading was volatile, with buy-the-dip attempts failing to gain traction. Short-term technical indicators are starting to flash caution. The Stochk RSI is already extreme negative, and the slope oscillator is declining further below its moving average, signaling weakening momentum. The ADX trend indicator reflects a fading short-term trend, and the VIX, while still below 20, is creeping higher, hinting at rising volatility. All smart money indicators are now negative, with accumulation distribution, Chaikin money flow, and the oscillator turning all negative, suggesting selling pressure. On the broader side, intermediate-term indicators, including the Arun, remain positive, though momentum oscillators are drifting lower. Growth stocks, particularly large caps, outperformed value, but were still down, with the S&P 500 growth-to-value ratio hitting another new all-time high. The financials continued to lag the S&P 500, and small and mid-cap stocks saw steeper declines than their large-cap peers. Moving on to economic and policy developments, looking at the broader context, several key economic and policy factors shaped Thursday's market. Interest rates did ease, with the 10-year yield falling to 4.36%. On the trade front, tariffs remain a focal point. A 15% tariff on South Korea was announced, lower than anticipated, while Mexico received a 90-day extension on its 25% tariff. Trade negotiations have been concluded with Japan and the EU, but no deal has been reached yet with China. In healthcare, President Trump sent letters to 17 pharmaceutical CEOs demanding lower drug prices by September 29th, which pressured the sector. On the economic data front, personal income and spending rose 0.3%, in line with expectations. Core PCE prices increased by 0.3%, slightly above prior readings. Weekly jobless claims came in at 218,000, better than expected, while the second quarter employment cost index rose 0.9%, above the forecast of a rise of 0.8%. The Chicago PMI at 47.1 indicates ongoing contraction, but outperformed expectations. Looking ahead to Friday, August 1st, very critical data will be released, including the Employment Situation Report, followed by construction spending and another major report, ISM Manufacturing. These will likely set the tone for the day. Seasonality data suggests a cautious outlook for August 1st, with historical weakness often seen in post-election years. A disappointing employment report or a break below the 20-day moving average for the S&P could tilt momentum more to the downside. The S&P 500 is finding itself at a pivotal moment. While the longer-term trends remain positive, short-term weakness is evident. Tariffs, corporate earnings, and Friday's employment data will be key drivers. A strong employment report could fuel a breakout above 6,400, but weaker than expected numbers might deepen the pullback. In conclusion, Thursday's market action showed resilience but also signs of continuing fatigue. The S&P 500 is still holding above key moving averages but struggled to sustain early gains, reflecting short-term selling pressure. The intermediate-term trends are still constructive and economic data remains broadly supportive, while volatility is ticking higher. With critical economic data looming on Friday, investors should stay vigilant. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available or to access the daily newsletter, please click on the links below.